My name is Stacey Lynn Schriever. This is Navigating Home Ownership, the path to owning a home. I want to say the path of owning a home in the new market. And what we are, definitely our goal is to be able to provide information. We like to lean in on education. The people that end up on this call, loan officers are on this call, people that are interested in home ownership. Sometimes a realtor will jump on the call, and we're going to cover all types of information. And I'm maybe even call out a loan officer to get their take on a few things. There you go. So if you have questions, please put it in the chat. And Anthony Glenn will monitor the chat and answer a question, or tell me to stop so that I can answer a question, or and he'll put my information in there. You're welcome to, like I said, ask whatever questions that you might have in the chat. As I do the Navigating Home Ownership, this is from my perspective as a branch manager, as a loan officer. This is definitely my perspective. There's a lot of perspectives on navigating home ownership, and there's a lot of experience on this call, but we just want to provide you with the best possible information for your success. I always like to start by thanking our veterans, and this particular veteran is my grandfather. This is Don Schriever. And I like to thank our veterans when it comes to home ownership, because they fought for our freedoms, and especially this time of year, so many of them are not with their families, and just the opportunity to be able to show his picture and thank him for protecting our country. We love VA home loans. That's a topic that I'm going to talk about. And whenever I see his picture, and I've got it framed in my office, I think about him all the time. And this is me outside of the office with my family. My husband, Ben Zachary, who was in the Navy Reserves, got out of the Navy Reserves in February of this year. So he still does the reserves, but he got out of A school. We were just so excited that he graduated A school. How many of y'all have a kid where you're like, ooh, yeah. And then this is my daughter, Landry, who thinks she's a recruit for the Navy. And then a most recent picture with Nana there. And this house, I always like to talk about why do I have passion about home ownership. And I like to show this house because this is the house I grew up in Arlington, Texas. Glennis, was it you the one that said you were in Grand Prairie?
Yes, ma'am.
Yeah, there you go. So this is not what my house looked like when I grew up, but it's pretty. But this is the most recent view, realtor.com view. And I like to show this picture because, boy, I tell you, that little girl on that left-hand side, which is a lot of years ago, the things that I would have told her about standing at the tree with that boy, kissing that boy, and how much trouble that was going to cause me. So those are the things that I think about when I look at that house. But I tell this so that I'd be able to tell you this. One of the passions that I have about navigating home ownership and about home ownership starts at this house, because my parents, hardworking people, never failed to make a monthly payment, rented this home, my childhood home, for 19 years. 19 years. So when you think about 19 years, and if I give it to you in the math based on today's math, that's $496,000, in rent that they spent. And were they doing the right thing? Absolutely, right? My dad was determined for my brother and I to go to the same school for our entire time, like the same kids. And his thought process, like a lot of people's thought process, is that it'll get better. We'll buy 6 months from now. We'll buy a year from now. It'll get better. And then what happens is time goes by so fast. I say this about my daughter Landry. She's 11 years old and I adopted. And when they brought her to me, she was 12 months old. And I remember that like it's yesterday. And she just had her 11th birthday. Ken has raised 4 children, 4 girls. And I know that in the time that I've known him, they have grown up before even my eyes. Anthony has 2 boys. And so it's just, that's the same thing with home ownership, is that time just passes by. So if you don't put together a goal or a plan, you think about $500,000, that's $500,000 in rent that was spent. So what we try to do is just make it real. I mean, that's what gives me the passion for doing this class. We do this class the first Thursday of every month. So if you know someone that needs to hear some of this information, pass that information along. And before we end today, we'll we'll give you the link for the January 5th because that's the first Thursday for the next class. I always provide a disclaimer. We are a mortgage company, Premier Nationwide Lending. It's where I serve as a branch manager and a loan officer. Our branch is licensed in several states, and Oklahoma being one of them is one that is I do quite a bit of business in. But we're lenders, and in order to put a loan together, there are a lot of people involved in that process. So we have to work with title companies, insurance companies. It's like baking a cake. We have to have all types of ingredients. We're not responsible for them, but we do have great referral partners. Ken has great referral partners. So does Anthony. So we do know who to work with that we know will do a great job. But one of the things we always have to do is just provide a disclaimer that we're not necessarily, they don't work for us. So we're responsible for us and for you and providing you the best possible advice. I always just like to be able to share that we're familiar with doing all types of loans, purchase loans, residential loans. We have all types of certifications. Our team was voted best in Denton County, and that doesn't mean anything when you're in Longview. I get that, ladies, but it meant a lot to us in Denton County. So, and for 2021 and 2022. So let's talk a little bit about what investing in your future and what that looks like. And the discussion topics that we're going to discuss today: should I consider buying a home? Am I able to buy a home? How do I get started? What's the path from loan application to home ownership? And I think what happens is sometimes when we just don't know what to do, we either don't do it, right? That happens because if we don't know what to do, what's the best, we just freeze, we don't do it. And then sometimes we become our own expert. And I'm just going to refer to Savannah. Savannah works at Birdville High School. I don't know what you do at Birdville High School, but if it's teaching, I cannot teach at high school. No, right? So I wouldn't want to step into your job tomorrow because that would not be my field of expertise, especially this day and age. I'm not sure I could do that. So a lot of times we talk to people on the phone and they're trying to start in different spots in the process. And what I try to say to people is that you don't want to be your own expert. You want to allow us to be able to walk you through the process so that you know what to do, so that you don't necessarily make mistakes in the process and get the cart before the horse, is what my dad used to say, right? Should I consider buying a home? Am I able to buy a home? You're in a position where you have to be able to save money a little bit. You got to have some skin in the game. We're going to share with you how to get started and what that looks like. I've worked with people and others on this call, we've worked with people sometimes over the course of, 2.5 years to get to a point where they could buy. But it's called a goal. It's a plan. It's being intentional. And that's what we want to help you guys be, is very intentional about it. One of the things I talk about is the rent versus buy and comparing the costs. And I think a lot of times people talk about the cost of renting, the money spent on renting after 1 year, 5 years, 10 years, and 15 years. And this kind of goes along with what I was explaining about my parents, is that the amount of money that they spent. And then you have to compare this to what you're on your own home and your own rental situation. If you're spending $1,000 a month in rent, that's, that would be low if you're spending that in rent, because a lot of people, and then home values over time. We are fortunate because we live in Texas. And our home values we don't feel the effects. Like we're kind of in a we don't have the impact of, the East Coast or the West Coast that they experience. We don't have that experience, and people are coming here. They want to come here. They want to live here because we have no income tax. It's no state income tax. And that is one of the reasons why we're a popular place to live. But the estimated future home value based on $200,000 purchase price with a 4% annual appreciation over the course of 15 years. And that just kind of gives you an idea. Now, obviously, there are different home prices. Some people are going to buy 400,000, some people more than that, whatever that might work out to be. But we've been fortunate that our values have been protected and they've continued to increase, even if it's small. So, as far as being an investment, it's a good investment over the course of time. Am I eligible to buy a home? These are the factors: that down payment and closing costs and debt to income analysis. And these are the things, today. I will say this: there has never been, in the history of hundreds and hundreds of loans that I've done, Ken's done, Anthony's done, there's never been two loans that look exactly the same. No two situations look exactly the same. They all look very different. And so your situation is going to be different than the guy that you're working with. And a lot of times what happens is a professional gives you advice, and then we go and we ask our friend, our person at church, our mom, our dad, and we ask all these other people all these questions, and then you get too much advice. And these are people that might have a mortgage, but they're not actually in the mortgage business. And so I always say, you don't know what their situation is. You don't really know what their debt is, what if they have student loans, if they have car payments. So just know that your particular situation is not like anyone else's, not even close. So allow us to help you navigate that process. But those are the three things that impact it. One of the things that I tell people about is, there it is, factors that affect your credit score. This is this is like probably my favorite slide in the whole slide deck, because I think a lot of times people have no idea. I know that before I was in the mortgage business, I did not have an idea of what factors impacted my credit score. So the first thing is payment history, paying your debts in a timely manner. Huge. Like, it is just a huge deal. Like, sometimes it's like, well, if I'm just a little bit late, no big deal. It can impact your score by 100 points. So it's 35% of your credit score is payment history. So payment history, beyond anything else, is just crucial. So you can see that in the little pie chart there. Keeping your account balances low compared to your approved credit limit. A longer credit history can increase your scores. So let me give you an example. So I was talking to a customer recently, and they were saying, well, I don't use these cards. I've paid these things off, so we're just going to close those accounts. No. So what you want, you don't want to have any debt, unnecessary debt, but you don't want to close those accounts because it gives you a credit history. It shows that you had used it, you had paid it off. And sometimes we'll be in a situation where somebody has good credit, like a good credit score, and we still can't get an approved loan because their credit history is thin. And when you hear someone say your credit history is thin, it means that it's less than 6 months old. They haven't had the credit card, or they haven't had that account for long enough to provide them a history. And so if you have something, you pay it off, you don't want to then close it because you want the credit history. So a long credit history can increase your scores. And again, account balances is important. Sometimes when if you have an account balance and your available credit is $5,000, and all things created equal, you charge on that credit card $4,663, which is close to the balance, and somebody else has the same card and their balance always stays about 33% or below what the available credit is, their score is going to be better. Good management of revolving credit. You can see that in the wheel as well. Opening new credit accounts or credit inquiries can negatively affect your credit scores. So I get this question a lot. People want to apply for a mortgage, but they don't want a hard pull. And we do have to do a hard inquiry to be able to understand what the nature is of your credit score and look at all the accounts and be able to give you an honest answer if you're approved. What impacts your credit score when it comes to inquiries is when you have multiple inquiries, when you are shopping for multiple things, because it's coded. A mortgage code pull is different than if you're going to apply for a credit card at Target, or if you're going to buy a car. So I tell people, when you're purchasing a car, for example, get your finances in advance. Go to a credit union and have your finances in advance so that when you go to the dealership, you say, this is going to be where I'm financing my car, if you're going to finance a car. Because the car dealerships, they're looking for the best note for them, not for you. And then you'll have multiple inquiries. What you don't want is a credit report with 15 or 20 inquiries on the credit. and they're all different locations. So that is what can negatively affect your score. You got a mortgage pull, and then you went, you got a car inquiry and a Target. And ladies, this is my part to say something to y'all. We get what, ladies, we go to Kohl's, and that well-meaning person at Kohl's says, do you want 15% off? Do you want 30% off? Apply for this credit card. And we jump all over that because we want to be able to come home and say, look how much money I saved. But not really. So you don't want to apply for credit. You don't want to be able to be in a situation like that where you're having multiple inquiries. You want to have 5 good accounts and some account history. Do you know what's on your credit report? Do you check them annually? This is an opportunity to go to ftc.gov so that you can see what's on your report. And then that way you'll know, what's your account summaries? What are your closed accounts? What are your, potential collections? We love to be able to give that. How much money do I need for a down payment? Over the summer in July, I was doing a presentation for communities and schools of the Dallas region, and communities and schools of the Dallas region have some wonderful, people that site coordinators, teachers or whatnot. And one of the questions that I asked in the room was, what is the minimum down payment for a conventional loan? And I was shocked that the highest percentage of the answer in the room, more than 50%, said 20% was the minimum down payment. And that is not correct. The minimum down payment for a conventional loan, especially when you're a first-time home buyer, is 3%. And now I understand 3% is still 3%, that it's not nothing. But if you're purchasing $300,000, 3% is a whole lot better than 20%, right? And a lot of times what happens is, a lot of times that's what we hear in the marketplace, in the news, where it's like, oh, it's so hard to buy a house, you have to have 20%. And that's not true. So if you have 3% of 300,000, that's $9,000. And we're going to discuss other types of loans, but that is the minimum down payment for conventional. The minimum down payment for FHA is 3.5%. And today, with the news of today, I don't know if you guys will be able to, I'm going to pull this up and see if I can show this to you. So today, the new FHA loan limit for single family homes is $472,030. I don't know how they come up with that particular figure. Can y'all see that screen? Yes. So that's the new loan limit that came out today. FHA is a good option when you're a first-time home buyer because it's 3.5% down. If your credit history is short, not long, if you've had a bump in the road, maybe you had a bump in the road because of a divorce or a death in the family or something along those lines, sometimes FHA is the better way to go because it's more forgiving for those kinds of things. So something to consider. I told you early on, I love veterans. VA loan is 0% down payment. The certificate of eligibility, we help veterans get their certificate of eligibility. If they've been honorably discharged, if they're currently serving, we'll help them get their certificate of eligibility, and they provide us with DD-214s, and we do all the legwork. USDA is a type of loan which is a 0 down payment loan, and it's good for rural areas. Now, Texas is becoming less and less rural, so we have to check it out. We have to figure out if that address or if that area will qualify for USDA. So for example, and I don't know, Glennis, I think you said you live in Grand Prairie, right?
Yes.
So that's not, you know where Weatherford is, right?
Yes, ma'am.
Yeah, so Weatherford at one point was USDA, and now it's not. And so, when I was growing up in Arlington, Weatherford was far. Now Weatherford, is west of Fort Worth, but it's no longer rural. There are areas of Sherman, Texas that are still rural. and considered in that USDA platform. So we have to be real specific when we're looking at areas that would qualify for that type of loan. But that's also a 0% down. They're very specific on qualifying, as far as like debt to income ratio and things like that. FHA and conventional and VA have a little more flexibility with the debt to income ratio.
Stacy, you think
Closing
it'd be a good time to pause for a couple of questions?
Sure.
Okay, so before we get maybe too far away from some of the credit questions, somebody had a question about what about people who don't have a credit card or have never had one?
So what I think is the best thing to do, there are a couple of things I would suggest. You can go to where you bank. You need a checking account. You could go to where you bank and you can ask them for a secure credit card. And what that means is you put down a deposit, maybe it's $300 or $500, and that's what a secure credit card is, so that they can report it to the bureau. You use that credit card, buy some gas, and then pay it off. So it does help to create a credit score. It is a credit card. You have provided security for it so that there's no, no detriment, potential downside for them. The other avenue, and sometimes this is a favorable avenue, I can see both sides of the argument. I know with Zachary, when Ben was trying to get Zachary a credit score, he is now 21. He has a very good credit score. When he was buying Zachary a truck, a small truck vehicle, he was on the loan with Zachary so that he could give him, because his credit is very good as a dad. So they were on the loan together, not just Ben covering the loan, but they were on the loan together. Then a year afterwards, Zachary was able to refinance it into his name. So that loan is now, truck loan is just in Zachary's name. There are some options, authorized user option. Sometimes you can put, a parent can put their 18-year-old, maybe even younger, on an account as an authorized user. Here's my suggestion. You can list them as an authorized user so that you can build a credit history and a score, but you don't have to give them the credit card. Because if they charge on it, you're responsible for it. But it does help establish a credit history and a score, as long as the parent score is a good score. I know my dad did that for me. I was an authorized user on one of his accounts, and that was very helpful to me. But I can see both sides of that. Again, he didn't just allow me to have access, to the card. Ken, do you have any more input on that? Oh, you're muted.
Sorry, I couldn't get unmuted. You covered it all. Just the one suggestion I would make is, even if you pay the credit card off in full each month, set it up to automatically pay the minimum payment. That way, if by chance you don't get it in the mail, it gets lost, you get busy.
Where will the money come from to purchase your home? These are some options that I always provide. So, food for thought, obviously checking and savings accounts. I use this analogy. If just $28, just shy of $28 of miscellaneous spending a day, and now you can't get out of, how many of us $10,000 in 1 year? So a lot of times when people come to me and they're working or whatnot, I'll analyze their checking account and I will talk to them about where miscellaneous spending is taking place. Netflix account, $17. Fast food restaurants, which used to be affordable, isn't anymore. So those are the things we talk about. Gift funds. You can have gift funds from a relative, a family member, a parent. I've talked to several people lately that are young people getting married, and their parent has said, hey, I'll give you this much money for the wedding, or you can not have a big wedding and we'll give you this much money to buy a house. Oh, pick the house. Just saying, pick that choice. 401k, people have 401k, and you can have a loan against your 401k to be able to purchase a home. And a lot of times people don't realize that it's your own money. You're borrowing against your own money, and then you can pay that money back over the course of 6 months or whatever the terms of withdrawal might be against your 401k. Cash value of life insurance. So I recently had a customer whose parents had a life insurance policy that they bought. We're not paying into it anymore. They had bought her a life insurance policy when she was a baby, and it was just dormant. And that life insurance policy had a value of about $5,000. So they said she could have it, cash that in, and she used it. Down payment assistance programs. We love down payment assistance programs, especially our first time home buyers. Down payment assistance programs, we use all of them, but there's one we use in particular, Texas State Affordable Housing Corporation. And it is TSHAC, TSAHC.org. If you ever want to go to that website has a litany of information. You can take the eligibility quiz on that website, and that will tell you if you qualify. It's grant funds, and grant funds can help cover, it's a hand up into the process. It's not a handout, but it is grant funds that can help cover down payment. We love that program. Sale of personal property. Sometimes we have stuff in our garage or an old car, or you know, that husband Henry bought a motorcycle or something. I'm just teasing you, Savannah. But you know, sometimes we buy things and then we don't really need them. So the sale of personal property, if you want to use that as an investment or for purchase on a home, we just have to show a bill of sale. We have to prove that you owned it if it's a big ticket item. Employer assistance programs. A lot of times our employers, and if we look at in the employer handbook, they might have an assistance program that you might not be aware of. This time of year, I always remind people, when you file your IRS tax refund, or you're getting a refund, get the refund and put it in your savings account, and that can be your down payment. Also, this time of year is a good holiday time where you can have a second job, and we can't count the second job as income, but we can certainly count the second job as assets for the purchase of a home. And a lot of times there's a lot of places that need people for retail or various things. Now, mortgage credit certificate, that's not necessarily what you'll be using as money towards the purchase of a home, but I always like to mention mortgage credit certificate because once you purchase a home, that can act as, so monthly debt allowed for 45% debt to income ratio is $3,600. Less the total debt that you currently have of $900, that means you're allowed a housing payment of $2,700 in this example. And again, we're going to have some one-on-one conversations with all of you and help, but this is just an example because a lot of times people want to understand what it is that they can afford. Now, sometimes what you can afford and what you're comfortable with are two different things. And, you know, I know that I've talked to a lot of people lately where maybe their rent was $1,500 or $1,600 a month. And if your rent is $1,500 or $1,600 a month, you could potentially be able to afford a mortgage payment that's $1,800 or $1,900 or $2,000 a month, because you're going to have a tax. You're going to be able to write the interest off on that loan. What's included in what is included in my monthly mortgage payment? The principal of the loan, amount borrowed to buy the house, the interest of the loan, the percentage of principal based on interest rate. Most loans that we do are 30-year fixed. We have all kinds of loans that we do. We do your property taxes and the insurance that protect, tornado or any of those kinds of things, that you have to have the taxes. You have an escrow account, which means that's the whole payment together, principal, interest, taxes, and insurance that the manages for you, and then pays those to tax once a year and insurance once a year. As you're making your payment, a portion of that payment goes into the escrow account. The only other thing that I will add to this is if you don't have 20% equity, you also have what's called mortgage insurance premium. And mortgage insurance premium is when you don't have 20% equity, and it protects the lender in case of default. How do I get started? These are typical items that we might ask. We might ask for current pay stubs to reflect over the course of 30 days. And we might ask for 2 years tax returns, especially if you're self-employed. We would leave for people that are W-2'd, we will get to, or we'll get your 1099s and tax returns if you're paid as a 1099. A photo ID that's not expired. Driver's license is our 2 months of assets for all the accounts that we're going to sort. So we are an automated system at Premier. So a lot of times what we're able to do is, and when we do an automated verification of employment, we will then also, we have a program, it's an encrypted program called Account Check, and we can do that instead of statements, bank statements. And we use a Premier Express program, which kind of explains what we talked about being automated. And that we like the automated systems that we use because it's just less paperwork. If you are in a situation where you would put 20% down, sometimes we can do an appraisal. So these are this is caution. You know, I always do the caution because I'm like, danger, danger. There is a couple of loan officers on this call, and we've all had this happen to us where people make decisions when they're in the middle of the loan process, maybe when they're already under contract. You don't want to change employment during that. We're going to verify employment. We're going to re-verify it. So you don't want to change employment. You don't want to have a significant increase to your credit card balances. This is big deal, big deal. You don't want to reduce your asset balances from what we originally saw. So I had this happen on a loan recently where somebody loaned money to their sister, you know, after, you know, I saw there was in a savings account $5,000 and they decided to loan $2,000 to their sister after I'd done the approval. You don't want to make large undocumented deposits. I was working on a loan and they decided to accept money from the father-in-law towards the purchase of a home without telling me. So when I renewed and I had it was a challenge to source that. So you don't want to have large undocumented deposits. You don't want to change banks, get frustrated and change banks. You don't want to move money from one account to the other. A lot of times people want to move money around a bunch. And when you're in the middle of a pre-approval, you don't want to do that. And you don't want to co-sign on a loan when you're in the middle of a pre-approval. Or
Yes,
who is that?
that's Sylvia.
Oh, hey, how are you?
Hi. I
So-
took your TSHAC course about a year ago.
Oh, okay, well, great. So as a realtor, you can take a minute and express some of the examples that you see on the PowerPoint as to why it's important to have a realtor.
Well, for one thing, if you are not represented by a realtor, then there's nobody to fight for you, nobody to tell you who can advise you, because the seller's realtor, their client is the seller. You're not. So you definitely want to be represented because you can, the realtor can negotiate. They can, everything that it says here can explain part of the contract. They're going to be working for you. That's what they do.
Absolutely. I appreciate you stepping in.
Tell them the best part. Who pays
And the
who pays your fee?
That's right. The best part is that a person who is buying never pays the realtor, because the seller pays the buyer's realtor.
Whoop, whoop.
Yeah,
Whoop, whoop, we like that.
yeah, people don't know
The seller
that. Yeah, a
pays.
lot of people don't know that. Yeah.
That's right. That's absolutely right. So here's the thing. When you're purchasing a home, when you're selling a home, it's an emotional thing. I know that people don't realize that. To me, the best thing about having a great realtor representing you, and we work with a lot of great realtors. So we feel like we can refer based on geography in the state of Texas. Our team, our branch, and our whole team spans the area of Texas. Ken is in Spring. He does a lot of business down in the Galveston area and Crystal Beach and around Houston. Anthony is in McKinney. Denise is in Pearland, and she does Pearland and Friendswood and other areas of Houston. So we've got Philip who's in Lufkin. So we've got loan officers on our team all over, and we like for them to work with competent real estate agents. And if they've taken my TSHAC class, they're competent, let me tell you. So there's always an example for that. But they can help you find, they can negotiate, and they take the emotion out of it. They communicate with the seller's agents, they set up closing for you. And as Ken pointed out, they, you, as a buyer, you don't pay the commission, the seller does. But you gotta have representation. You wouldn't go into a courtroom without representation, or you shouldn't. And you're entering into a contract, and it's a binding contract to purchase a home, so you need representation. I'm not gonna spend a lot of time on this, but from contract to close, you have a purchase contract. We provide you with what's called initial disclosures. In that time, at the beginning process, when you're getting home inspections, we'll lock the rate, we'll go through processing and underwriting. We will order documents, we'll order services, appraisal, title, get your homeowner's insurance. Sometimes you'll hear homeowner's insurance referred to as hazard insurance. And then once we're approved, appraisal's back, we will then disclose the loan at the end, and issue a closing disclosure, and then you can close 3 days. Closing day, whoop, whoop, and then sign the documents and move in. When you closing and funding, it's not your house until the loan is funded. So we close, sign documents, you, the seller, and then all the wires are connected and we fund. Most of the time, closing and funding happens on the same day. Sometimes you close on one day and fund the next day. It depends on schedules and, you know, when the seller is signing and things like that. But typically with us and our team, we close most of our transactions in 30 days or less and close and fund on the same day. I did a podcast about credit. It's 30 minutes long. It's something I did along with T-Shack. You can listen to it in your car. I go into a lot more depth than I can here about credit. So that's the little QR code. Anthony can also put the link for this in the chat, or I can go back to it too at the end. We are definitely a leader in lending. Our company is owned by North Texas Financial Network. It's now just an acronym. NTFN is what it stands for. Premier Nationwide Lending is the flagship of the 3 companies that we own. Park Cities Mortgage, North American Mortgage. You see myself, Ken is on there, Denise that's on the call today, and Anthony is also a loan officer and helps with team services. This is also gives us, I always say, leave us a review. All of us are on social media, Facebook, Instagram, and I recognize that when I was a kid living in the house in Arlington on Westview Terrace, Glennis, you might know where that is, that he wasn't telling me no when I wanted to paint my room pink. He was being told no because he had to ask permission. So what we want is to empower you so that you can live in a place that is your own. That's what we want. Okay. And why I tell you that story is my parents were living in that home that my mom lives in now. And my dad, they were in that house about 2 years. And my dad was talking to me like I'm talking to you now. And 45 minutes later, he was gone at 61 years old. And the closer to that I get in age, the younger that seems, by the way. And I share that story with you because had I not convinced him to purchase a home, my mom would not have, I don't know where she would have, she worked for the school district, special education. I don't know that she would have been in a position to purchase that type of home. And now she has a home with a lot of a lot of equity. And if she decides tomorrow that she just wants to stop planting posies, then she could sell that house and it is increased in value over time. If she decides that she doesn't want the yard work anymore and wants to move into assisted living, then we have that option. We would not have had that option had they never bought a home. So I was proud to be part of that process and put them in a position to be able to purchase a home. And you know, your timing of what you want to do and when you want to do it today might not be the right timing, but next year might be, 6 months from now might be, a year from now, and we're all going to be here. Collectively, you've got a lot of experience on this call, and we want to be able to put you in a position.
I do have one last comment though. The homebuyer process can be very overwhelming. As you can tell, Stacy is very detail oriented and she's very good at what she does. I did not even be in the mortgage business. I didn't buy my first house till I was in my 30s. So the stuff Stacy went over it can be as simple as, hey, Stacy, I've got $8,000 and I'm comfortable with $1,800 a month. What can we do? And she can go in and figure out all the stuff, to get you to where you need to be. So she was very good at covering everything in the whole process. But if, and I also want to stress one more time that 401k, borrowing
Oh,
against
that's
it, is
good,
very
yeah.
important. I don't know how many people that have called and said, hey, I've got $7,000. That's all I've got. Well, they call and they check with their 401k, and some of them you can borrow up to 50,000 for the purchase of a home. So that
I know I talked too fast. I'm sorry. I tried to get it done real quick but one of the best things is that, and I'll have Anthony email everybody out, the list of mortgage terms. That would be good information so that you guys can hear these different things that we say all the time, DTI, LTV, and we say it like it's nothing. And yet those are acronyms that maybe not make sense to everyone. And so we'll email those out so you'll have them.
One
Any lasting
request,
questions? Oh,
one
sure.
request was just whether or not we can email out that PowerPoint. I'm not
So
sure
we
that
can't, yeah, we can't email out the PowerPoint, but again, once the footage is edited and previous classes I've done are on the Stacy Lynn Mortgage. So you could rewatch it there, and then we do the same class first Thursday of every month. We make a few adjustments to the PowerPoint, but pretty much same information. Occasionally we can pull some things out of the PowerPoint to send. But
And that-
we do follow up and send some information. The digital home buyers book, Anthony, you can send them that, and then the list of mortgage terms.
Okay, and then Savannah asks also, is there a way to meet with you or one of the team members, just so that she and her husband can see kind of where they are?
I haven't seen Henry, so I don't know. I'm not sure. No, I'm kidding. She's got, oh, there he is. Hey, Henry, how are you?
did he finish his homework?
Kid, let me tell you something. We have compliance. Was that what they call them? Compliance classes, things that we have to take.
Continuing
And
education.
continue it's like well, we do our continuing ed, but also the ones that we have to take for the company. Everybody on the team, I would like to tell you that everybody on the team has finished theirs and it's December the 1st, but that would be a big fat no. And so we've got some stuff ahead of us that we have to do. So it is a little bit crazy. So we're all making fun of each other. Have you done your homework? But yes, the answer to your question is our office. I'm in the Flower Mound office today. So that's the closest office to you. And
Okay.
we're happy. We meet with people here all the time. Got a nice conference room. You can meet with me. Anthony comes to the office a couple of days a week too. So we're happy to do that.
Okay. Well, I got your contact info. So,
Yay.
yeah, Sylvia on here she's been helping me also with just realtor stuff, and we're just saving up. So that'd be great. I'll try to email
Yay,
you.
Sylvia.
Hi,
Yay to
Stacy.
Sylvia.
Yeah, I thought this would be a good course for them to take as first-time home buyers. So,
Yeah, see that you got the smartest realtor in town right there. She's so smart.
It's great.
Well, I want to give everybody a big virtual hug and have a happy, Merry Christmas and a Happy New Year. And let's all buy a house for Christmas. Everybody needs a house for Christmas.
I know, right?
All
Yeah.
right. I appreciate y'all.
Thank you.
Have a
Thank
great
you.
night.
Thank
Have a
you.
good night.
thank you, Stacy.
Thanks.
You're welcome.